All right, TGIM, and welcome to week 44. It is Monday, October the 31st, and it's one hell of a kryptonite-filled week up ahead. We have four major central banks meeting. We have U.S. non-farm payrolls on Friday, and of course next week we have the U.S. elections, and that's only heated up most recently with the FBI coming back on the agenda with a few more kind of queries, it seems, into Hillary Clinton's emails. We basically had the polls where she was leading by anything from 10 to 12 points collapse into her only leading by about 1 or 2. So it's starting to look even more uncertain in regards to the potential outcome with the U.S. election just being a little bit over 1 week away. So anyway, we'll touch on all of that, I'm sure, at a later video, but for now I just want to focus on the four banks that are going to be meeting. We obviously have the RBA out tomorrow, Tuesday, the 1st of November. We of course also have the BOJ. Wednesday is all going to be about the Fed, which is probably what most people will focus on. And I think probably the most interesting to me is going to be the Bank of England, which will be coming out on Thursday. So let's just quickly take those. I think the BOJ, the RBA tomorrow are pretty much going to be a wash. Obviously watch out for language. But from my perspective, the RBA is not really doing anything anytime soon. I think they're anything from neutral. I would even say maybe slightly more constructive than, let's say, in the dovish camp. I think the BOJ is pretty much not going to do anything now for the rest of the year. They're going to sit on the sidelines, cross their fingers that the Fed actually moves in December and does the heavy lifting for them. We've already seen what's happened when they've tried to move 3 times this year, and every time that they've moved, they've actually ended up strengthening the yen, not actually weakening it. Which brings us to the Fed. I don't anticipate a move. We have a 17% implied probability of a hike for Wednesday. It's around 70% for December. So it's really going to be about the indicative language in regards to a move in DEC. The BOE, I think, is really the most interesting because I actually think it also coincides with an inflation report. If you could see the meetings last week with Carney and meeting for Parliament, he was a lot more kind of concerned about the big degradation in sterling, as well as potential kind of inflation fears that could come from a cause of that. Basically saying that we've not seen inflation in the UK that has stemmed from this huge depreciation we've actually heard in sterling. So I actually expect Carney to be a lot less dovish, a lot more hawkish than the market's expecting, and potential upgrade in regards to UK, not only inflation but also growth forecasts, which could finally put some legs under sterling. And of course, you all know I'm a big advocate of being short euro sterling. That's a big macro trade, and it's all about positioning. So definitely watch that space, and good luck out there this week.